All right. Is this stream working? Okay, so it looks like we are streaming here. Let's try it. First time doing a stream on TradingView, so just bear with me while I figure some stuff out. Okay, so I'm going to start doing more regular streams. I've been writing analysis on TradingView for quite a long time now. Used to do it every day, but now I'm doing more of a collection of analysis over a couple of days, and I'll just do, I think if you're watching this, you would have seen some of my analysis through a couple of weeks as well. So what we have tonight is the non-farm payrolls for the US. Wait, let me just change my timing here. So we have the non-farm payrolls at 8:30 p.m. Singapore time GMT plus 8, where the US will be releasing the non-farm payrolls numbers. Was 390K, expected at 260K. So, looking at a change, an improvement in the non-farm employment change numbers, but not as big as previous. So it was 390, expected 260. You can see that for the past many months, we have seen very good numbers, significantly stronger than expected, just slightly less than previous. So, what I actually think, and this is for all the traders out there, when you're looking at trading and non-farm payrolls, a lot of people tend to try and predict what the non-farm payroll number is. I think that it would be, you can try and guess what the number is, but don't try and enter trades based on the guess. You use your guess and then develop different trading scenarios. In a good news scenario, what you want to look for. In a bad news scenario, which trade you want to trade, and then in a nothing happens, stay out of all your trades. So by planning your trades that way, you tend to have a little bit less, a bit less emotions in your trading. You get different scenarios. You know what to enter, when to enter, if conditions are right. So we do have non-farm payrolls number to be released tonight, 8:30 for the US. Was 390, expected 260. Unemployment number, unemployment rate looking to go from a stay at that 3.6%. Right, it's looking to stay at 3.6%. It's a terrible day to start my first live stream. Yes, I start coughing as well today. Right. So, in my view, what I think that I've been following the economics, I've been following the news from the FOMC, with interest rates increasing. Fed Chair Powell have been indicating that as they increase interest rates, there is a likelihood that we could see unemployment drop. Right? No, we could see unemployment rise. As interest rates increase, we could see unemployment rise from that 3.6%. And also, because unemployment could rise, then we could actually see the non-farm payroll number drop, which is what is slightly being projected there, slightly from a 390 to a 260. average hourly earnings is a key factor that you want to pay attention to now at a 0.3%, expected to stay at a 0.3%. If this number climbs too strongly, for example, here in Feb, where they were expecting it to stay at a zero point 0.5, but it went to a zero point 0.7, that's likely to indicate that inflation, wage inflation is growing. And as wage inflation grows, that's going to spur on inflation overall. And that's the one thing that, or one of the many things that the FOMC or the Fed Reserve for the US is trying to stem, is trying to keep it down. So you can see here as well the headline that Jobs Day is the new CPI day, because the Feds are looking at the jobs report to get an idea of whether inflation is going to run out of control, and if it does, then if we see good numbers here, unemployment rate maybe it goes up a little bit, 3.7%. Non-farm payroll, it could come down to a 250, 240 number there, or it could be even at anywhere from 240 to 280 would be considered a reasonable number. And average hourly earnings, if it goes to a 0.3 to a 0.4%, that could reinforce the Fed Reserve's plan or path towards more aggressive rate increases as they try and stem that inflation growth. Another thing to note is that tonight we do have the CAD employment numbers as well. So employment change for the CAD looking to drop slightly, still positive, from a 39.8K to a 20K. So I expected some improvements there, but not as great as before. And unemployment rate looking to stay at 5.1%. So what this all means is that at 8:30 we could see quite a lot of volatility across the board on with the news release. So looking at the charts here, first things I want to show you is the dollar index. So I've been talking about the dollar index. I've been writing about the dollar index quite extensively. Just putting a line there at 107. All right, so I've been writing about the dollar index quite extensively. It's been climbing. It's been climbing very strongly now above that 107 level. And why it's been doing that, it's really driven because of how the euro dollar has been dropping. So if you look at the dollar index as a basket, as a weightage of a basket of currencies, the euro dollar is usually 40 to 50% of the dollar index. So as we see the euro dollar weakening massively recently, we see that push the dollar index towards the upside. At this point here, if I do scroll out even to the monthly view, go all the way out, you can see that the last time we got to this 107 level or climb up towards the 107 level was back in May 2000. So we're 22 years away. We're hitting a level that we saw 22 years away. Can it go higher? Yes. What it did back in the 2000s was that it pushed above that 107 level all the way towards 110 before we saw a big retrace, and then the continuation up towards 120 and then all the way back down again. So in this case, what I'm anticipating here is that as we hit this 107 level, we're likely to see quite a lot of volatility, especially as it reaches this new high. And we have a major news to be released in terms of the NFP. So what I'm thinking here is that if we do see relatively good news coming from the NFP, then we could see the dollar index push higher. We could see it push higher, even possibly towards that 109 level, pushing up. But I think that that's the trend following scenario. If you want to adopt a slightly more contrarian view, it could also be that with such a high level there, and as I scroll through the other pairs later, you see that they're all at significant low points. We could actually be poised for a big rebound or big correction in the markets here if we do see a little bit of an uncertainty in the non-farm payrolls. So stay a little bit flexible here. Dollar index could push higher, but I think that it needs to possibly react at this 107 a little bit, maybe track down a little bit before pushing higher. Something similar to what we saw here in June, where it hit 105.50 level, and we thought that was a multi-year high. It had a big retrace from 105.50 all the way back down towards 103.50 before continuing its move up again. So I'm just being a bit wary. Right now, I'm totally flat on all my trades. I'm not in any trades at this point, because I want to see whether we could look at any big corrections here on the dollar index. So looking at the non-farm payrolls and what other trade ideas we could have, the Aussie dollar, right? Aussie dollar has been dropping very significantly as well. I'm going to be repeating that quite a bit. Everything has been dropping significantly. I like how the Aussie dollar has reacted to this 0.6850 level. It's hit and turned from this point. So I'm anticipating if we do see a stronger dollar, we could look at further downside on the Aussie dollar. Bear in mind, I'm looking at this on the H4 time frame right now. If you are looking at any trades to jump on board during the news, then you might be looking at it on the possibly even on the H1 time frame. So what I'll be looking for here will be a continuation of that move towards the downside. As much as I have my next support level here at 0.67, you can see that the interim support level here is at that 0.6760 level. Right? So at that point, we could see some downside first towards this level. So I put in that. What should I do? So put in a short position here. Okay, before I put in any trade recommendations or trade ideas or specific trade ideas, a quick disclaimer as well is that if you are watching this, if you are likely to follow any trade ideas, please bear in mind this is my view of the market. This is how I'm looking at the trades. I'm not considering your trades. I'm not considering your account size, your trade size, or your risk appetite. Take this as an analysis. Take this as a bit of an educational view rather than a trade recommendation. I cannot be responsible for your trades, whether it gets into profit or whether it gets into loss. Right, so what I would be looking for here is for the Aussie dollar to track lower. Maybe if by 8:30, and that's in about 4 hours time, if it comes below this 0.68 level, I could be looking at a first short-term trade towards that 0.6770 level. A tight stop loss there with the news, about 15 pips towards the downside, towards that next support level. That's something that could happen, but you would need to manage it very closely. I think a safer bet will be to say if price does break below this 6770 level, you could be looking at a 20 pip bought a 20 pip stop loss, 20 pip stop loss, and a good 40 pip take profit level. That would be something that I would think about if it breaks below that point and we do see a stronger dollar because of the non-farm payroll. So I'll move this to that 830 level. So I'm looking for that move there to push lower. And because it's so far away, it would give you a bit more time to react to the news. You're not rushing into a trade. I would even sit there, watch it come down, break below that point, close below that point before looking to sell down for a 1:2 risk-reward ratio trade towards the downside. So that's in a good news scenario for the non-farm payrolls. We can see we could look towards the Aussie dollar to trade downwards. Looking at a Kiwi dollar, the last time I spoke about, I'll take that away. So that worked out. I'll take that away. So the Kiwi dollar, I would actually say that if I zoomed out, if I showed you the H4 time frame here, it has struggled, right? The Kiwi dollar, as it broke below that 0.62 level, it hasn't found much downside. It came down, bounced straight back up, came down towards 6140, bounced up, again at 6140, bounced up, and it's been pretty much being traded within that 62 to 6140 level. So I would say that, can I expect further downside on the Kiwi dollar if we went into the daily time frame just to find this next support level that was way back in 2020 as well? I wouldn't be looking for much. I wouldn't be looking to trade that down, right? So in a good news scenario, good US news scenario, I look to sell the Aussie dollar towards the downside. Let's say in a bad news scenario, for the non-farm payrolls, I could actually be looking for this to push up. And if it can break above that 0.62 level, we could see good upside on the Kiwi dollar. So what I will be looking for here in this case is, in the bad news scenario, alternate view, in the bad news scenario, I'll be looking to buy. I would be looking to buy the Kiwi dollar up at about 6.2 there, with a take profit of about 40 to 50 pips. A very tight stop loss as we're reacting to a resistance level there, about 20 pips. You're still looking at a 1:2 risk reward ratio towards the upside on the Kiwi dollar. So, again, a good news scenario, we have the Aussie dollar to sell down. In a bad news scenario, we have the Kiwi dollar to buy up. Just because it's been trading in that range, it struggled to break lower. If it does break above that resistance, we could see some upside. The euro dollar has been dropping. And just before this session, the euro dollar actually came towards that 1.007 level. Just missed parity, true parity, but it's very close. Right now, it's rebounding back up. Okay, so I would say that you look at euro dollar, the last time it got to parity was 20 years ago. I would say that, be very careful. I anticipate a lot of volatility on the euro dollar at this point, especially if we do see further or we do see weakness in the dollar. If we do see weakness in the dollar, this could push quite significantly up, quite significantly towards the upside, as that selling pressure has been so significant. Any push towards the upside, we could see a big move. So I would say be very careful there. If it does break below this point, I was doing analysis there, I had another level at 0.97, right? So I would say that in terms of the news, in terms of the non-farm payroll news, in a good news scenario, we could see the euro dollar come down and break below parity. We could see euro dollar break below parity, but I think that you want to be extra careful there. I would stay away from the euro dollar unless I see a very clear direction, unless I see a very clear trend on the euro dollar after the news. Right? So if after the news at 8:30 you see it push lower, by all means look to sell it down towards parity or towards that 0.97 level. But if we see it bouncing around this level, if it struggles to break below this line, then I would say be very careful. We might see a big correction on the euro dollar, not because of a fundamental reason, but because of technicals hitting a key support level. We could see it bounce back up, and also because that we could have a lot of speculative buyers looking to buy, looking for a rebound and looking to buy at parity, which could push prices towards the upside if it does come down towards this point and fail to break, or we could see a lot of volatility here. The pound dollar, I actually like, it's been dropping that significantly. This when it shot up, this was the news because of PM Boris Johnson saying that he's going to resign. But as that push upwards above 102, we saw that move get exhausted, before tracking back down now. This move lower is because of the euro dollar. Euro dollar drop gave strength to the dollar index, which brought everything down across the board. The pound dollar, unfortunately, is going to be kept at this 1.19 level. Downside on the pound dollar is kept at 1.19, but if we do sit there and watch, and if price does break below 1.19, then we could see significant downside. I had another level down at 1.15, but that's very, very far away. That's a good 400 pips away. I would say that that's not a reasonable target for the news, but what I will be looking for on the pound dollar is for selling opportunities towards the downside here. Below 1.19 during the news there, we could say that I'm looking for this move, let's say at about 1.1875. Below 1.1875, you would have a 30, 40 pip stop loss, a good 80 pip take profit level. I think that if we do see the pound dollar break below this 1.19 key level, we could see quite significant downside. This is all on the back of a stronger dollar to push it lower, right? So that's pound dollar. Again, in a good news scenario, we look for the pound dollar to sell down, dollar strength to push it lower. Here comes the interesting one. I'll take that away because it's a little bit messy. Here comes the interesting one. USCAD. USCAD dropped, had a big drop because of some recovery in oil prices. We saw Brent and WTI gaining some levels, finding a support and gaining some strength. That's why we saw CAD drop, but you can see that CAD has shot up from this 1.28 level. It cleared 1.29 all the way straight towards 1.30. What I would love to see is from now, it's 4:49 right now, from now to 8:30 p.m. tonight before the news, I would love to see the CAD climb up towards 1.3050. Right? I would love to see it climb up towards this point, which would give us that opportunity to say that if price, before the news comes out or when the news comes out, if price clears above that 1.3080 level, just to be a bit safer, 1.3080 level, you could be looking to buy it up, stop loss about 40 pips, take profit. You could even do a 40 pip or 1:1 risk reward ratio towards the upside. Or if it climbs up towards this level and then it turns down and it rejects that level, then I'll be looking for selling opportunities as it hits and turns back down. Similar to what happened overnight, I'll be looking to sell down from 1.30, below 1.3030. Again, stop loss of about 40 pips, a take profit of about, you could even go to the recent low 70, almost 80 pips. You're looking at a close to 1:2 risk reward ratio trade towards the downside. So I'm looking for this move on the US CAD, looking for it to push up towards the 1.3050 level. And then we could have that flexibility with the news, with the non-farm payroll news to be released, and also the Canadian employment numbers to be released. Higher volatility, we're setting up for both either an upside potential or a downside potential as it reacts to that key resistance level of 1.3050. With that, looking at the yen, right, we have recently, or just today, we had very bad news coming from Japan where former Prime Minister Shinzo Abe was shot when he was on a political campaign. So he was shot in public while on a campaign. Right now, it hasn't been news of how is he doing. But what we actually saw was that when that news released, we actually saw the yen drop, or the US yen drop from 136 down towards that 135.40 level. So as with any geopolitical uncertainty or news events, the first reaction is usually towards liquidity. where the dollar or the yen does get bid or does get bought up a little bit more as investors and traders move towards reserve currencies. But what we saw was that that move happened and then it's now quickly retraced back towards that 136 level again. So similar to the US CAD, I would say that 136 on the US yen is a key level there. We can see that it has hit several times and failed to break higher. It actually has failed to break significantly lower as well. It has been testing within this region. So what I would say is that again, in a good news scenario, if we do see the dollar strengthen significantly, then we could look at that upside potential at about 1.136, 136.20. No, be a bit safer there, 136.40. You could be looking at a 136 buy opportunity at 136.40, 45 pip stop loss towards that recent high of 137. A good 50 pip, you're looking at a 1:1 risk reward ratio towards the upside. Alternatively, if we didn't get much hints from the non-farm payrolls about the future or the strength of the dollar index, then we could see the yen get resisted by this 136 level and turn lower. So what we could actually be looking here is for selling opportunities below 135.80. This time stop loss a little bit tighter at 30 pips. Take profit, you could come down to about 60 pips towards that low point, a 1:2 risk reward ratio towards the downside. So just a quick recap here. US yen in a good news or in a bad news scenario, if it comes close to that 136 level, we can be either looking to buy it up or to sell it down. Similar with the US CAD, if looking for it to climb up towards that 1.3050 level, and then a reaction on the release of the US employment numbers and the Canadian numbers, we could stay a bit flexible. We could see a reaction at that resistance level. Pound dollar, I'm looking for further downside on the pound dollar, looking for it to break below this 1.19 level on a good news scenario coming from the non-farm payrolls. The euro dollar, I would say that it could continue or it's most likely continue dropping to test a little bit lower, but volatility is going to be high in spite of the news to be released. So I would say you can trade this even without the news. So I wouldn't be focusing on this during the news event because it's just added volatility into a very volatile situation already. The Kiwi dollar in this case, I would say that in a bad news scenario for the non-farm payrolls, I'll be looking for it to climb up above that 0.62 level, push higher. This would be a contrarian view, looking to reverse the recent move towards the downside, especially because it hasn't really found much directional buyers here. And then lucky last, the Aussie dollar, I'm looking for it to track lower in a good news scenario to break below this 0.6770 level to test 0.67 about 0.6700 level towards the downside. So for those of you who are watching, and I hope you enjoyed this quick session that I'm doing here. I'll try and do this more regularly. Please, if you haven't already, jump onto my profile, follow me. I do post up quite a number of trade ideas almost on an alternate day basis. I'll be happy to look at your comments. If you can give me any feedback, I'll be looking forward to that as well. And for now, trade well, trade safe. Take care. Bye bye.